Bismillahirrahmanirrahim. Assalamu alaikum. I am Sayyid Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. The title of this course is Principles of Accounting, and the course code for this subject is BS 161. This is our lecture number 27, and the topic for today's discussion is adjusting entries and making a adjusted trial balance. Basically, this lecture is in continuity to my previous lecture, and this is part second of the previous lecture. In lecture number 26, we have discussed in detail how to make an adjusting entry or how to make multiple adjusting entries, which is actually the step number 4 in the accounting cycle. However, in this lecture number 27, we'll discuss how to incorporate those adjusting entries what we have done in step number 4 of the accounting cycle, and then to make the adjusted trial balance in step number 5. So let's go ahead. The outline of this lecture comprises of the discussion related with the accounting cycle, and to understand how to complete the accounting cycle, which consists of a series of steps. For that, we have selected a numerical problem, which is problem 3.11 on page 137 of the recommended book. As we have already done our adjusting entries of the same problem, so therefore, the next step is to make a correct trial balance or making an adjustments into the trial balance or correction in the trial balance in the previous step, and then to come up with the final version of adjusted trial balance, which shall be used later on for making the financial statements. So here we have basically our numerical illustration related with Hampstead Realty, which is a property-based business organization that obtained the listing of houses from the owners and then later on sell out them to the prospective buyers. In this illustration, we have already done our adjusting entries for, let me select the pen. Adjusting entries for our building for the month of March. We have adjusted the relevant entries for depreciation and as well as for the office equipment. So basically this is step number 3 of the accounting cycle, and we have already given the trial balance, after which we have done step number 4 in the first 2 instruction of this question. For those, you can listen to my previous lecture, which is lecture number 26, where we have discussed in detail how to make adjusting entries for building, for office equipment, and then in instruction B, we have also made the adjusting entry for office supplies used during the month of March. In this lecture, the emphasis will be to discuss how to incorporate the step number 4 adjusting entries into this trial balance so that to make the adjusted trial balance. So basically we have the depreciation entry. So we'll try to find out the title we have used in the adjusting entry and to incorporate them in the trial balance one by one. So let's see how to do that. This was our part 1 where we have adjusted the or made the adjusting entry for depreciation expense building and then accumulated depreciation building. Then we have made the adjusting entry for office equipment and the accumulated depreciation office equipment. And finally, in part B, we have made the adjusting entry pertaining to the office supplies expense and the office supplies. Now we are discussing basically the part C of this numerical illustration, that is to make the adjusted trial balance. For making adjusted trial balance, we have to go back to the previous question and let's move ahead one by one with the adjusting entry and try to find out where we have to make the correction or to adjust the relevant account titles. So in order to solve part C, which is to make an adjusted trial balance, we have to come back to part A in order to see the adjusting entry. We have to carefully analyze that we got two titles. One is with debit $250 and the other account title is having a credit entry of $250, and the title are depreciation expense building and the accumulated depreciation building. So what we have to do is to go back to the question and carefully analyze your trial balance. So you have to analyze your trial balance carefully and try to find out if there is any title with the same name, that is depreciation expense building. As we know that the trial balance starts with the assets and then with a liability and then capital, finally revenue, and then all expenses. So we can see that there is advertisement expense, automobile rental expense, salaries expense, and telephone expense. However, there is no expense with the title of depreciation expense building. So therefore what we have to do is to follow the same specimen, that is to write down the company name at the top, then to mention here as adjusted trial balance while you are solving this case, not this trial balance. It will be corrected with the title of adjusted trial balance. Here we have to mention the adjusted trial balance, and then finally the date shall be written as it is. We have to copy the information from the trial balance, like cash was not affected in any of the adjusting entry what we have done in part A and part B. Similarly, account receivable was not affected. However, office supplies was having an adjusting entry in part B. This was not affected. Building was having an adjusting entry with the account title of depreciation expense and as well as accumulated depreciation building. So this will going to be changed in the adjusted trial balance. Office equipment is not supposed to be changed as we are following the historical cost principle. However, the accumulated depreciation office equipment will be changed and incorporated accordingly with the adjusting entry. Account payable was not affected, capital was not affected, Volantino capital and drawing were not affected, commission was not affected. Similarly, no change in the remaining expenses. So what we have to do is to change the office supplies value, which is 850, accumulated depreciation value for the building, and as well as accumulated depreciation value for office equipment in the subsequent adjusted trial balance. So here we have the first adjusting entry, depreciation expense. So therefore what we have to do is to generate an additional expense account at the bottom of the trial balance. So here we have to generate the depreciation expense building title. Similarly, for the second title, which is accumulated depreciation building, as this title already exists in your trial balance over here, so therefore there is no need to generate an additional title of accumulated depreciation building. Rather, we have to adjust the amount in the available balance, which is 500. As we can see that here we have a credit of 500 in the accumulated depreciation building account, and in the adjusting entry we have an additional credit entry of $250. So therefore it is a credit balance, and already in your trial balance we have a credit balance against accumulated depreciation. So therefore the credit versus credit will add up. So 500 plus 500 will make $750. And here we have at the bottom of this trial balance, we'll make an adjustment with the title of depreciation expense building, and we have to mention $250 just beneath this $600. So how to do that? Let's move directly to our next step, where we have incorporated the entries into our adjusted trial balance. So this is basically the solution of part C. We have to mention the company's name, Hampstead Realty, at the top. Then we have written the adjusted trial balance rather than to be written as a trial balance, because we have already adjusted, or we are going to adjust the entries of part A and part B into this trial balance. Therefore, it is named as adjusted trial balance. In the step 3, we have to mention the date, which is March 31st, 2001. Then we can make a table like this on your notebook, which consists of 3 major columns. The leftmost is for the account titles. The middle one represents the debit column that states with the title of DR along with the $sign, which is following the monetary principle, and DR represents the debit record. Similarly, the loss column is pertinent to the credit entries or credit accounts along with the $signs, which represents the monetary principle or the money currency or the denomination what we are using in this numerical illustration. So the next step is to start copying data from the trial balance, and in the trial balance we have cash with the amount of 9,750. Let's go back to the question and see if we have correctly copied the first information. So yes, the cash value is as it is $9,750. So from here we have picked up this amount and inserted into the adjusted trial balance in this fashion. So this was our first entry. Next is to go back to your trial balance once again in the question. Here we come again. Let me remove the ink so that I can elaborate in more sophisticated way. We got account receivable. Its value is 7,500 in the numerical question. As we know that in the first 2 adjusting entries, no entry was affecting the account receivable, so therefore we can insert this value as it is into our adjusted trial balance. You can see in the highlighted as green where we have actually incorporated the adjusting entries. So this is as it is from the previous trial balance. Let's go back to our question once again, and we can see that in the trial balance, the value for office supply is $850. However, we can see that in adjusting entry B, we have certain account titles which were affecting the office supplies, and what were those? Let's go to the adjusting entry. Here we have the adjusting entry in part B for the office supplies, and we can see that an account title with the office supplies expense was generated along with the office supplies. Office supply was our asset, and we got a credit value in the adjusting entry against the office supplies. However, in the trial balance in the question, the office supply was having a debit balance, and in the adjusting entry we were having a credit entry against the office supplies as over here. So that basically will require us to subtract the credit entry from the debit entry. That is to subtract this $350 from the balance of the office supplies, which is $850, and then to mention the remaining amount into the adjusted trial balance. How to do that? Here we have to adjust our first account title, which is the office supply. So office supplies previously were $850 and we have used $350 during the month of March. Therefore, the remaining amount left over in our office supplies stock is $500. So we have incorporated our first entry into the trial balance and have made an adjusted trial balance. So against this, every debit we have a credit entry of $200 and $350. We'll have a credit entry of this same amount with the title of office supplies expense because we have incorporated our first entry. And then we have to incorporate the debit entry of the office supplies as well with the title of office supplies expense. First of all, we have to check out in the question that either we have any expense with the name of office supplies. There is no title available, therefore we have to generate a new title with the name of office supplies expense. So you can see that after telephone expense, we have generated an additional expense account what was available in the adjusting entry, that is office supplies expense. We have to use or we have to write the same title into the adjusted trial balance, that is office supplies expense. Let's go back. The amount against the office supplies expense is in the debit column. Therefore, we have to mention $350 in the debit column against the office supplies expense. So this is the way how we are going to incorporate each and every adjusting entry into our trial balance and to make the adjusted trial balance. So let's go back to the question and to mention the remaining title. The land was not affected at all. So we have to pick up the land and building values as it is, 30,000 and 90,000, and to insert them into the adjusted trial balance. Let's see how to do that. So you can see that the land and building is written as it is in the debit column and picked up from the trial balance and mentioned in the adjusted trial balance because our adjusting entry in the previous part were not affecting these two titles. And we have to mention them in the original historical cost. Let's go back to the trial balance and to write down the next title. So the next title over here is accumulated depreciation building. The accumulated depreciation building, and we know that this was affected in our part A. So we have to go to the adjusting entry pertaining to the building, here it is, and we have to insert the relevant data of debit and credit into our adjusted trial balance. So let's see how to do that. We have seen that on March 31st we have did our adjusting entry over here in part A under the instruction first that we have to incorporate into the adjusted trial balance. We have to analyze carefully the two titles which are named as depreciation expense building with a debit entry of $250. This is our expense account. Similarly, we have a contra asset account with the title of accumulated depreciation building which is having a credit amount of $250. So let's go back to the trial balance and to figure out if these two account titles exist or not. Since we were on the building title and after that we are having the account title of accumulated depreciation building already available in the question with in the trial balance, which is having $500 credit amount. So therefore in our adjusted trial balance we have not to mention an additional account title because this is already there in the trial balance. So we have to copy this title and to mention in the adjusted trial balance. We have highlighted in green to make you realize that these 6 titles were affected in the trial balance. And after adjusting these 6 titles, we have made this final adjusted trial balance. However, during exam, you are not required to highlight the titles in the adjusted trial balance, because this is just for making you understand that here we have actually incorporated our adjusting entries. So as we know that accumulated depreciation building was having $500 in its balance, and in the adjusting entry we have an additional $350, or rather we have $250 in the credit section against the accumulated depreciation building. Let's counter check. So here we have accumulated depreciation building, which is having $250 in the credit column. So therefore the credit and credit will add up. So 500 plus 250, our balance against the accumulated depreciation building is now $750. Let's go back to the same entry and to see if we do have depreciation expense building. Is it available in our trial balance? Let's counter check it out. Here we have our trial balance in the question, but there is no title with the name depreciation expense building. So therefore we have to generate an additional expense just beneath the office supplies expense. Here you can see that after generating the first title, we have to generate an additional title with the name of depreciation expense building, because this is an expense. So this is why we are mentioning in the expenses portion of the previous trial balance with the amount of $250, because the amount against which was already having a debit of $250 against the depreciation expense building. So from here we have actually picked up this title and the balance and inserted or injected in our trial balance, and then finally mentioned in our adjusted trial balance in this fashion. So after that, after following the accumulated depreciation, we have to go back to our trial balance once again and to find out which is our next title. So we have come back to our trial balance, and the next title is office equipment with $21,000, and according to the historical cost principle, we need not to change this value, rather to inject the same value in our adjusted trial balance in the office equipment section as $21,000. So let's move ahead with our next title in the trial balance is accumulated depreciation office equipment, and as we know that this was also affected in our part A under the instruction. You can see that. So we have to go to the adjusting entry in part A that consists of the details related with office equipment. So here we have our adjusting entry, against which we have once again two titles as depreciation expense office equipment. This is our expense account, and just beneath that we have our accumulated depreciation office equipment, which is our contra asset account, which is having $350 in the credit column. So we have to look back into the trial balance, and to figure out its value is 700 in the credit column, and the adjusting entry is also showing the credit balance of $350 against the accumulated depreciation office equipment. Therefore the credit and credit balance will add up and finally will make $1,050. So in our adjusted trial balance, now the balance against the accumulated depreciation office equipment will be not 700, rather it will be now $1,050. So let's see if we have correctly incorporated this transaction in our adjusted trial balance. You can see that in our accumulated depreciation office equipment, now the balance is $1,050, which I have already explained how did we incorporate this entry. For the remaining accounts, we have to go back. Rather than to discuss the other accounts, we have an additional entry against the office equipment with the name of depreciation expense office equipment. So we have to go back to our trial balance and to figure out if there is any expense related entry or title is there with the name of depreciation expense office equipment. After analyzing, we have noticed that there is no account title available. This is why we have to generate an additional title with the name of depreciation expense office equipment. You can see that we have generated an additional title of depreciation expense office equipment, and as its value was in the debit column in the adjusting entry in part A, this is why we have written its value in the debit column under the adjusted trial balance. Let's go back to the adjusting entry of office equipment. Here we can see that the second entry has already been incorporated in the trial balance. However, the first entry was missing with the title of depreciation expense office equipment. And as we can see that this is an expense account and its value is in the debit column. Therefore, we have to pick up this value and bring forward or carry forward to the next step of adjusted trial balance, and then to mention it just beneath the expenses title available in the adjusted trial balance with the title of depreciation expense office equipment. And here it is, we have incorporated the depreciation expense office equipment correctly at the right place. After incorporating the adjusting entries, we have to go back to the trial balance in the question. Here it is, our question in the trial balance. We can see that the next account title is accounts payable. Afterwards, we have M. Valentino Capital. As we know that accounts payable and capital's balance is normally a credit balance, because we know according to the diamond rule, when there is an increase in the capital or liability of the company, it is recorded as a credit balance. And similarly, when there is a decrease in the same capital and liabilities, it will be recorded as a debit entry. As there was a decrease in the owner's equity with the title of M. Valentino Capital, a drawing, what we specifically write down, the drawing means that owner has taken off or withdrawn its money from the business organization. How much? $4,500 has been withdrawn by the owner M. Valentino. This is why the equity level of the company has reduced. This is the reason the drawing of the owner is usually written in the debit side of the journal, or while you are making any entry to record the drawing of owners. So we can see that for the remaining account titles with the name of commission earned, M. Valentino drawing, capital, accounts payable, advertising expense, automobile, rental expense, salaries expense, and finally the telephone expense. So basically these titles were not affected at all in our previous two adjusting entries of building, of office equipment, and the office supplies expense. So basically the first two entries were not affecting the rest of the title in the previous section. This is why we have to pick up these values as it is from our trial balance with the same amount and titles, and to insert them or to carry forward them into the next step of making the adjusted trial balance. So let me remove this ink and let's see either we have correctly written these values into the next section or not. Let's go forward to the adjusted trial balance. Here it is. You can see that we have correctly inserted the commission earned and as well as the remaining 4 expenses available in the trial balance. So this is why the remaining account titles are not highlighted, because these have been written as it is and picked up from the trial balance and inserted over here in the adjusted trial balance. Dear student, you have to notice that we can insert a single line while continuing our question. However, you have to avoid double line at any stage because that will represent that question has closed down. This is an important point to be noted over here. After incorporating the adjusting entries and correctly inserting the relevant data from trial balance into the adjusted trial balance, the final step is to sum up these values in the debit column, which come up with the total of $173,200, and the right hand side shows that we have to sum up the credit column and it come up with $173,200. So if both sides are equal, it means that you have correctly incorporated your adjusting entries into the next step of accounting cycle and have nicely constructed your adjusted trial balance. There is no mistake at all. So hurrah, you have correctly inserted and our balances match with each other. This is also known as self-checking techniques. That is, in accounting, this is you are privileged, or the students are privileged to know that either they have done their question rightly or wrong. So the counter check itself tells them that they have correctly inserted the values because both sides will come up equal to each other. And this is what the double entry accounting system also states, that all debit must equal to the credit values. You can notice that there is a double line just beneath the final balances, which is representing that our question has closed down over here against the adjusted trial balance. So I hope that you now understood how to incorporate the adjusting entries and to reach at a nicely constructed adjusted trial balance, which shall be used later on for making the financial statements. So let's go ahead, and you can see that on the accounting cycle we have completed our journal. We have done with the posting to the ledger account. The question was having a trial balance with the help of and which we were required to make certain month-end adjustments. And now we are on stage number 5, where we have correctly made our adjusted trial balance. And this trial balance, which is named with adjusted trial balance, shall be used later on in the next step of the same problem to make the financial statements, which are income statement, the statement of owner's equity, and as well as balance sheet, which the instructions are asking to make in the subsequent part of the instruction under this numerical illustration. So for that, you have to stay tuned with my channel to listen to my upcoming lecture, in which I will discuss how to make the financial statements in detail. For the time being, thank you very much for listening to this lecture. If you have any question, you're free to ask on system, and as well as another way around, you can also email me with your queries on my official email address as mentioned in the footer of this lecture. Good luck for the day. Allah Hafiz.